Hey everyone, welcome to PrimeFX, where we teach how to trade safely, not how to gamble. Today is our second video and we are going to talk about how brokers make money. Broker is someone which is a middleman. Like if you go to a market to buy something, you cannot go to directly farmer to purchase the chili. You will go to market and buy from him. And how that person is making money, actually he is buying that thing lower in low price from the farmer and selling to you in a higher price, and he is actually getting a middlemanship. He's getting money from both your order and the farmer order too. That is known as spread. In forex, in trading, we do not go to market directly and purchase gold or whatever. We have a broker whom we give order to purchase behalf of us, and he take fee. That is known as spread. For example, we go to this Bitcoin chart, and right now currency its price is 75,490.85 cents. If I put a sell order, definitely I will be I have it should be put on the same price, but it won't put on the same price. You will see that your order will be from a little higher price, and if you want to buy something, and it will also be from some lower point. So that's the money gap is actually spread. That's the broker fee on every sell and purchase order. Broker get commission on it. This is how brokers make money. Next, our topic is major pairs and minor pairs, and also exotic pairs. There are several currencies in this world by whom we can trade and earn our profits, but we recommend, and mostly traders recommend, you major pairs, some to minor pairs, and we do not recommend exotic pairs. What are major pairs? Each currency pair, for example, there is a pair Euro USD or USD CHF. We have one base currency and other quote currency. The first one is known as base currency. Base currency is what on which behalf we are trading. Like we are trading euros and we are comparing it with United States dollar. And the same in the form of this, we are trading USD in toward CHF. All the pairs where base or exotic currency is of USD is known as major pair. There are seven major pair mostly widely used. Then we go to minor pairs. Minor pairs are those, they are 10 pairs, famously those rich nations in this world, like in Europe, in Japanese, Australian dollar, Canadian dollar. These are some currencies where we can trade on as a minor pairs. The remainings all are exotic pairs. Exotic pairs are like if you trade on Saudi Real with the Malaysian, this is a very, these two economies, no doubt the two economies are very big, but in the sense of trading world, these are known as exotic currencies. So to trade on exotic, we do not recommend trading on exotic pairs. This is because of the spread. Something is a famous, it is readily available, and all the brokers would not have to work hard to bring you that thing. In case of any currency who is being traded with United States dollar, those major currencies, broker charge you a low fees, so their spread is low and the possibility of getting more profit is higher in it. In minor pairs, their spread is little higher than in major pairs. We recommend those brokers who have lowest spread, and on exotic pairs spread is very high, so that's why we do not recommend exotic pairs. So this was our second video, and if you like our content, follow us on this channel, leave a comment, stay updated for the next video. Thank you so much.